Hello everyone, this is Dr. K. Jagannayaki, Professor in MBA Department, Institute of Aeronautical Engineering, Hyderabad. Today I would like to discuss with you about books of prime entry, which is also known as journal. So after going through this topic, the learner will be able to understand the concept of primary entry, features of primary entry, advantages and pro forma of journal, along with few examples. Coming to the meaning of prime entry or a journal. A journal is often referred to as book of prime entry or the book of original entry. So in this book, transactions are recorded in the chronological order. The process of recording transactions in a journal is called as journalization. The entry made in this book is called a journal entry. Coming to the functions of journal, the first function is analytical function. Each transaction is analyzed into the debit aspect and the credit aspect. This helps to find out how each transaction will financially affect the business. And second, recording function. Accountancy is a business language which helps to record the transactions based on the principles. Each such recording entry is supported by a narration which explains the transactions in simple language. Narration means to narrate, that is to explain. It starts with the word being. For example, Mr. A invested 10,000 rupees in the business on 3/6/24. So daily transactions we used to enter in the book of prime entry, which is known as a journal, and also the original entry. So the same transaction, by using double entry bookkeeping system, we used to specify he invested in the business. So it means that capital account to see he invested in the business in the form of cash, no cash account, debtor to capital account. So if you write like this, here we used to write the narration being invested in the business. So like this we used to narrate each and every transaction in the accounts. So that is known as recording function. How we are going to record, and we used to give clarity on the transaction, what type of transaction, on which date, and how much amount. So that we used to specify in the books of journal. The third function is historical function. It contains a chronological record of the transactions for future references. Coming to the advantages of journal, the following are the advantages of a journal. The first one is chronological record. So it records transactions as and when it happens. So it is possible to get a detailed day-to-day information. So minimizing the possibility of errors, this is another advantage. The nature of transaction and its effects on financial position of the business, it can be easily determined by recording and analyzing into debit and credit aspects. And third one is narration. It means explanation of the recorded transactions. For each and every recorded transaction will have a brief explanation, that is known as narration. The next, it helps to finalize the accounts. Journal is the basis of ledger posting and the ultimate trial balance. The trial balance helps to prepare the final accounts. So it is like the original entry day-to-day transactions we used to mention, the journal. Then based on the journal, we have to post those transactions in another book which is known as ledger. On the basis of ledger, we used to prepare another statement, trial balance. Then, on the basis of this, we used to prepare the final account like balance sheet, profit and loss account, trading account, like that. The specimen of a journal book. So, if you see, this is the pro forma of the journal book. It consists of date column, particulars, voucher number, ledger folio, debit amount, and credit amount. So, date column, this column contains the date of the transactions, which is in the form of DD, MM, YY, and where in the particulars we used to specify name of the account to be debited and name of the account to be credited, whether it is cash account, capital account, or what type of account that we used to specify in the particulars column. Then if any kind of voucher numbers will be there, that we used to specify under voucher number. And ledger folio means this is the reference of page number of the account in the ledger, and debit amount and credit amount. So below this particulars, we have to specify the narration describing the transaction, what type of transaction it is. The second one is particulars. This column contains which account is to be debited and which account is to be credited. It is also supported by an explanation called narration. The third column is voucher number. This column contains the number written on the voucher of the respective transaction. And fourth one, ledger folio. This column contains the folio means page number of the ledger where the transaction is posted. And next column is debit amount and credit amount. This column shows the financial value of each transaction. The amount is recorded in both the columns since for every debit there is a corresponding and equal credit. For example, as per voucher number 31 of Rai Brothers, on 10/5/2013, goods of 50,000 were purchased. Cash was paid immediately. Ledger folios of the purchase account and cash account are 5 and 17 respectively. So, journal entry of the above transaction is given below. The date of transaction took place, that is on 10/5/2013, that we have to mention under date column. And particulars, we clearly mentioned in the original entry as per voucher number 31 of Roy Brothers on 10/5/2013, goods of 50,000 were purchased. So as we purchase the goods, the type of account is purchase account, which is debited, increase in assets on debit side, and cash was paid immediately. So how we made the purchase in the form of cash? So decrease in cash. So that should be mentioned on credit side. What is the narration, the explanation, whatever we have given, being goods purchased for cash. And the voucher number clearly specified, voucher number 31, and ledger folio also we mentioned. These transactions we also posted in another book which is known as ledger, and in which page means page number 5 related to purchase account, and the same type of transaction is also mentioned in the page number of 17 of ledger in cash account. The amount which we mentioned on debit side is 50,000. The same amount also mentioned on credit side in the form of cash account. Let us illustrate the journal entries for the following transactions 2022 April 1st. On 1st April 2022, Mr. Vikas and Mrs. Vaibhavi, who are husband and wife, start consulting business by bringing in their personal cash of 5 lakhs and 2 lakhs 50,000 respectively. And second transaction made on 10th April, bought office furniture of 25,000 for cash, and bill number mentioned 2013 F3, and 11 opened a current account with Punjab National Bank by depositing 1 lakh. On 15th, they made another transaction, paid office rent of 15,000 for the month by check to Mr. and Mrs. Realtors Properties. The voucher number is 3. On 20th April, bought a motor car worth 4,50,000 from Millennium Motors by making a down payment of 50,000 by check and the balance by taking a loan from HDFC Bank. The same voucher number we also mentioned, like how we mentioned during the office furniture. Voucher number M slash 13 by 7. On 25th, they made another transaction because and Vaibhavi carried out a consulting assignment for Avan Pharmaceuticals and raised a bill for 10 lakhs as consultancy fees. And bill number also mentioned Avan Pharmaceuticals have immediately settled 2 lakhs 50,000 by way of check and the balance will be paid after 30 days. The check received is deposited into the bank. On 30th April, salary of one receptionist at the rate of 5,000 per month and one officer at the rate of 10,000 per month. The salary for the current month is payable to them. So this is the information furnished in the journal. So based on that, now I'm going to discuss how they used to maintain those transactions. How do they enter in the book of journal or in the book of original entry? So let us start in the date column on 1st April 2013. Cash account to Vikas capital account to Vaibhavi's capital account. So cash account is on debit side because both wife and husband they have invested cash. So as a result, there is an increase in the cash. So that should be mentioned on debit side and it should be invested in the business as capital. So the narration what we wrote being capital bought in by the partners. In the ledger folio, the page numbers we mentioned cash account on first page, Vikas capital account second page, Vaibhavi's capital account third page. The amount invested altogether 5 plus 2.5 total 7 lakhs 50,000 cash deposited under cash account. And specifically, when we are talking about individual capital accounts, 5 lakhs invested by Vikas and 2 lakhs 50,000 invested by Vaibhavi. On 10th April, furniture account debtor to cash account, being furniture purchased in cash. So immediately they purchased furniture by paying the cash. So furniture account to cash account. What comes in? Furniture comes in and cash goes out of the business. So 25,000 and 25,000. Whereas coming to 11th April, Punjab National Bank account to cash account, being current account opened with Punjab National Bank by depositing cash. So how much cash they have deposited? 1 lakh. So 1 lakh debited to PNB and credited the same cash to the business account in the form of cash. Then on 15th April, rent paid, being rent paid to realtors properties for the month. So rent account to PNB account. So 15,000 they paid as rent and that can be credited to the rent account and debited from the rent account. 20th April motor car account to Punjab National Bank account. So few of the things they make purchases by check and rest of the amount payable by taking a loan from HDFC Bank. So motor car account debited to Punjab National Bank account credit side to loan from HDFC Bank. So total 4 lakhs 50,000 debited to motor car account and the same credited 50,000 from Punjab National Bank and 4 lakhs they took in the form of loan. On 25th April, being amount received and revenue recognized per fees charged. So whatever amount 2 lakhs 50,000, the amount received that should be debited in PNB and Avan Pharmaceuticals that is also debited 7 lakhs 50,000 And to consultancy fees, they paid 10 lakhs rupees. On 30th April, they paid salaries to the receptionist and office manager. So salary account debited to salary payable account. So total 15,000. Both amounts we should specify on both debit and credit side. So let us illustrate the journal entries for the following transactions. So let us take another example. Journalize the following transactions in the books of Mr. Roy. He started business with a capital of plant 10,000, bank 8,000, stock 12,000. On 2nd April, he bought furniture for resale at the rate of 5,000 and bought furniture for office decoration at the rate of 3,000 rupees. On 3rd April, paid rent out of personal cash for 2,000 and on 8th April, sold furniture out of those for resale at the rate of 6,000. On 12th April, paid salary to Mr. X for 1,200 rupees. On 15th April, purchased goods from Mr. Mukherjee for cash at the rate of 3,000. On 18th April, sold goods to Mr. Sen on credit for 8,000. On 20th, Mr. Sen returned goods valued 1,000. On 22nd April, received cash from Mr. Sen of 6,500 rupees in full settlement. On 28th April, bought goods from Mr. Bose on credit for 5,000 rupees and 30th returned to goods to Mr. Bose of 500 and paid to Mr. Bose 4,000 in full settlement. So this is the available transactions. Now we'll see how to enter into the journal. So on 1st April, plant account debited, bank account also debited, stock account debited to capital account. The narration is being plant, bank, stock introduced in the business. So how much amount? 10,000 plant account. In the bank, they have deposited 8,000. Stock account 12,000. So total 30,000 credited. Then second, purchase account to bank account. Being furniture purchased for resale. So how much? 5,000 on debit side and 5,000 on credit side. And third transaction is that being furniture purchased for office decoration. Furniture account to bank account. How much amount they have spent? 3,000. So the same amount should be debited and credited. And rent account to capital account, being rent paid out of personal cash. So how much amount they paid in the form of rent? 2,000. So 2,000 rupees debited to rent account and credited from capital account, same amount. On 8th April, being furniture out of those meant for resale or sold, cash account debtor to sales account. So 6,000 rupees we have to specify on both sides of the journal. On 12th April, salary account to bank account. Explanation is being salary paid to Mr. X. So 1,200 paid to Mr. X. And 15th April, being goods purchased. So purchase account, as there is an increase in the assets, it should be mentioned on debit side. And at the same time, as we purchased, there will be decrease in cash. So that should be mentioned on credit side. So we purchased goods by paying 3,000 cash. And on 18th April, Mr. Sen account to sales account, being goods sold on credit to Mr. Sen. So debit side 8,000 to sales account and on credit side the same amount should be credited from sales account. On 20th April, returns inward account to Mr. Sen's account, being goods returned from Mr. Sen. So 1,000 worth goods returned by Sen. So that is the reason we have to enter in the returns inward account 1,000 rupees and also the same we have to decrease from Mr. Sen's account. And 22nd April, being cash received from Mr. Sen in full settlement. So cash account 6,500 and discount allowed account is as he made full settlement 500 discount is received to same accounts, total 7,000. On 28th April, being goods purchased from Mr. Bose on credit. So, as Mr. Bose, we made credit purchases. So, purchase account should be debited, yet to pay. So, that is the reason on debit side we mentioned 5,000, and from Bose account we have to credit 5,000 as it is credit purchase. The same 5,000 we mentioned on credit side. On 30th April, Mr. Bose account to cash account to returns outward account to discount received account. Being goods returned to Mr. Bose and paid cash in full settlement. So total 5,000 debited to Mr. Bose account and other 4,000 is paid in the form of cash, and we received discount 500 and return outward account also 500. So please observe the convention of entry accounts to be debited or returned first with dr as a suffix, and accounts to be credited or returned subsequently with a prefix to. So just by understanding this, we can able to understand which account to be debited and which account to be credited. Coming to the subdivision of journals, journals are is divided into two types. One is general journal, another one is special journal. So special journal further divided into different subsidiary books like cash books, purchase day book, sales day book, returns inward book, returns outward book, bills receivables book, bills payable books. So coming to general journal, this is a book of chronological record of transactions. This book records those transactions which occupy so infrequently that they do not warrant the setting up of special journals. Examples: opening entries, closing entries, rectification of errors. So very occasionally we used to have this kind of entries, and that can be mentioned in the general journal. The form of this journal is as under: date column, particulars, ledger folio, debit amount and credit amount. Where LF stands for ledger folio, it indicates the page number in the ledger, and DR denotes debit and CR denotes credit. So recording of transactions in this book is called journalizing, and the record of transactions is known as journal entry. And next type is special journal, is subdivided into cash book, purchase day book. There are different types of books, and these books are called subsidiary books. And compound journal is for a single transaction, only one account is debited and one account is credited. That is known as simple journal. The transaction requires more than one account which is to be debited, or more than one account which is to be credited. That is known as compound journal. So previously we discussed one problem, that is the example of compound journal. So let us take one example. Started business with cash 50,000, planned 24,000, stock 4,000, sold goods for cash 8,000, and to Miss Agrawal for 10,000, and Miss Agrawal settled her account less discount 600. So in this case, if you observe, the date is not mentioned, so leave it is. And cash account, cash how much they paid, 50,000, right? And plant account 24,000 and stock account 40,000. So total, if you add all the three, 78,000. And coming to the second one, goods sold for cash 8,000, that should be debited, and also to Miss Agrawal 10,000. So which account as good sold means it comes under sales account. So 8 plus 10, total 18,000, that is credited to sales account. And third transaction is that Miss Agrawal settled her account less discount 600. So cash account 9,400 and with a discount 600. So total, that is again discounted to Miss Agrawal account, total 10,000. So this is a typical compound journal. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.